Hello, everyone. Thank you for joining us today for navigating the new CSRD reporting landscape. I'm Dee Butler, the head of growth at Submit.com. We are a software solutions provider that offers an online data and reporting submission platform based in Cork in Ireland. As head of growth, I'm passionate about driving innovation and growth in the field of data management and online submissions. So with the onset of ESG and CSRD reporting, I felt it was important to get in front of it and start to speak with some of the experts in this field, which brought me very happily to Dr. Sophie Taysom. Dr. Sophie Taysom is the director and founder of Kia Consulting, an ESG advisory firm based in the UK. She primarily works across real assets, helping clients develop their ESG strategies. With a diverse background spanning government, business, and academia, Dr. Taysom brings a wealth of experience to her consulting work. She has an extensive ESG and real estate platform on LinkedIn, which now has well over 6,500 members. Clients Dr. Taysom works with include private equity firms, pro-tech companies, ESG and impact advisory firms. In addition to her consulting work, she's a frequent speaker at national and international conferences and regularly publishes articles. More details on her publications and engagements will be shared with this webinar recording after the session today. She's passionate about building positive and effective stakeholder networks and relationships to drive sustainability efforts. Over to you, Dr. Taysom. Thank you.
That's me. It's worth noting that just to repeat, the slides will be shared. So there are a few slides with quite a lot of detail, so don't feel like you've got to desperately sort of scribble everything down. Okay, so first up, what would be really helpful for you to think about during this session, and we'll have a bit of time for Q&A at the end, and you can always contact us afterwards, is to what extent are sustainability and ESG built into your business? And then in the context of the ESG and sustainability, what for you are some of the key challenges and opportunities? So what we'll be covering is ESG and sustainability and why it matters, the European reporting landscape, the who, the what, the why, just to put it in and provide a bit of context, and then developing a plan, the absolute critical, action is needed. So ESG sustainability, why it matters. I'd like to begin just by making sure we all have an understanding of ESG. So ESG, environmental, social, governance considerations, is essentially about providing a way to think about risks and issues as they relate to financial, non-financial elements of a business. So when we're talking about ESG and sustainability, we're talking about sustainability in that really broad sense of sustainability in the context of business sustainability and longevity. In terms of how we think about ESG, so we have these sort of verticals. Now, these verticals aren't necessarily discrete. So governance, for instance, is critical throughout the entirety. So governance kind of sits to one side, but it also overlays and underpins everything else that happens. In terms of, and it's can also be viewed through something called a double materiality lens. So that's thinking about both your business's impact as well as what are those wider impacts which will impact on your business. So that could be elements like climate change and so on. So in the context of environment, we're generally thinking about things like materials, greenhouse gas emissions, biodiversity, then also thinking about the impact of things like climate change. The social element, so that's very much looking at how you do business. So that can be everything from labor management relations, sort of how you manage staff health and well-being. What about diversity and inclusion? What about seeing your staff as really active stakeholders? Health and safety, to that sort of more external facing, the procurement, again, diversity and inclusion, again, that stakeholder engagement piece. Governance, we're talking about that overarching business governance. So thinking about governance as a whole, as well as the specifics of ESG governance. So in terms of the governance as a whole, we're talking about anything from what are your risk management processes, what's the financial management systems, ownership and control, taxation, whistleblowing. Then there's that critical bit in terms of ESG sustainability, how is that in itself governed? So I'll skip through this very quickly. What we have seen over the last number of decades is really a shifting and understanding the role and function and degree of accountability of business and corporations. Within this, we've seen really a shift from this sort of philanthropic CSR type model to a much more robust ESG driven model. So it's trying to address sort of all sorts of things. It's also trying to limit things like, so if you look more recently, in 2008, we had the global financial crisis. We also had a number of really significant scandals. So in the UK, we had the horse meat scandal. We had also globally the H&M supplier fire. 2015, we had the VW scandal. So that was a case where VW was saying certain things about sort of emissions from cars, which was not correct. So a whole range of scandals. So it's really that opportunity to sit back and kind of go, okay, this isn't working. So what are the systems, processes we need in place to try and be able to read across companies, ensure that companies are saying what they're doing and so on. So within the EU in 2018, we've then got the European Council's publication, the Action Plan on Sustainable Finance. Over the last few years, we've also, of course, had the Corporate Sustainability Reporting Directive, the Non-Financial Reporting Directive, way too many acronyms, and just this year, the EU Corporate Sustainability Due Diligence Directive. So again, putting it in context, what's the purpose of all of this? So these points are from the 2018 European Commission's action plan. They have sort of moved on a bit, but I think it's useful just for thinking about this in terms of context. So really, the purpose of these regulations is to reorient capital flows towards sustainable investment. So this is thinking about sort of economic growth, but in a way that is both sustainable and inclusive. It's also really about managing those financial risks. So it's financial risks stemming from climate change, from resource depletion, environmental degradation, and addressing a whole host of social issues. And it's also critically, and this is, I'll touch on this a bit later, it's fostering transparency and long-termism in financial and economic activity. So there's a huge amount, I know there's a huge amount of information on this slide. There are a whole range of other regulations which I won't address here, but these are really sort of the main four that we need to be thinking about. So you might have heard of SFDR. So that's really about increasing transparency by financial market participants and advisors on sustainability risks. It's essentially about protecting investors. It's about ensuring companies are doing what they say they're doing. The main things to note in terms of the SFDR is you might have heard of like Article 8 and Article 9, so light green funds versus dark green funds. So it's how you package funds and actually how you need to demonstrate what you need to demonstrate in terms of, you know, the sustainability credentials of those funds. Lots of things happening in that space. So there's been a recent consultation about, you know, does that need to be refined a bit further? You would have all heard of the EU taxonomy. That's really about establishing a harmonized approach to classifying financial products as being sustainable at the EU level. Increasingly, there are quite a few conversations about the potential development of a social taxonomy. It's unclear as to whether or not that will happen following the recent parliamentary elections, but it will be interesting to see. In terms of what's really coming to front of mind is CSRD, so the Corporate Sustainability Reporting Directive. And I'll spend a bit more time on this. So this is really about modernizing and strengthening rules on social and environmental information that companies have to report. It's impacting directly on a much broader set of companies than was the case with the non-financial reporting required. So it's estimated it will directly impact about 50,000 companies. So 50,000 companies will need to report using this. So it also encompasses listed small and medium enterprises, as well as some non-EU companies, and I'll touch on who that will be in a sec. It will also have much wider impacts if you're part of the supply chain and so on. Much more recently is the agreement around the Corporate Sustainability Due Diligence Directive. So I was fortunate enough a couple of months ago to go to a session in the European Parliament, 3 hours. It was fascinating on CSDDD and how it applies in the context of human rights. And actually just what a real game changer these regulations as a whole are. This establishes a duty, and this is why it's a bit different than things we've seen before. So it's really establishes a duty to identify and address potential and actual adverse human rights and environmental impacts. There's also an obligation for large companies to adopt and put in effect a transition plan to meet the 2050 Paris Agreement. So I think that human rights element in particular is a really interesting one. I work mainly in real assets. So there are a couple of areas of known risks. So it will be really interesting to see what actual positive impacts this will have, which I think it will. So the reporting landscape, the who, the what, the why, the important stuff. Okay, so this is where it's a bit like head under a wet towel at times, but I'm hoping this will make sense. So basically, so you've got CSRD, you have the European Sustainability Reporting Standards. So these are the standards which underpin CSRD. So these are the standards you report against. So the standards have been developed in draft form by EFRAG. So EFRAG, for anyone who pays attention, it's probably a group you've heard of them quite a few times, might not know who they are. So they're the European Financial Reporting Advisory Group, and they've actually produced some really, really good documentation around all of this. So in terms of CSRD, in terms of the kind of general requirements for reporting, we're talking about a potential of 82 disclosures with a potential of 1,144 data points. However, it's really important to flag that underpinning this is a double materiality assessment. So it's not every country will have to, every company will have to report against every disclosure. So under the general requirements, so obviously cross-cutting, this makes sense. Environmental, so it's things like how a company's sort of taking into account and thinking about impact mitigations, what have you, around things like climate change. In terms of their impact, areas like pollution, water and marine resources, resource use and circular economy. In the social context, it's looking very much both at companies' own workforces throughout the value chain, and that's really important in terms of how many other businesses who aren't required to report will be impacted. Affected communities, absolutely critical, and customers and users. And of course, there's the governance point around business conduct. So the $1 million question, who reports and who can report voluntarily if you were so deemed it necessary? So basically there are a number of companies that already will need to report. So basically they need to publish reports from next year. In the list of resources, some companies have already sort of published reports. Now, it's important to note that this is very much a kind of journey. So what this is about, or what the EU is wanting to see is that degree of transparency, openness. I'd like to think of it as the good, the bad, the ugly. So it's that sort of what's worked well, what do we have a good handle on in terms of data, analytics, all of that sort of stuff. What actually we might not be so good on, but we've got a plan to address. And what are the other things we need to keep an eye out on, but at the moment, we're not too concerned. So CSRD gives scope for both qualitative as well as quantitative elements. So moving along, so in terms of the next level down, so we've got large EU companies not currently subject to NFRD, so they'll need to start publishing reports from 26. It's really important to look at the definition of what they consider to be a large company in this context. So for EU companies, this is 2 or more of the following: more than 250 employees, annual turnover of more than 40 million euros, or total assets of 20 million. Where it gets really interesting is, so EU listed companies will begin, so EU listed SMEs must begin reporting over the next few years as well, and also international companies. So this is really about it's only reasonable that those international companies with substantive operations in the EU play by the same rules, obviously, and actually are obliged to do the same reporting. And there will be wider business impacts, which is where I suspect many of you may be impacted on. So where the main impacts will be, so not only does CSRD and CSDDD really establish a kind of this is how you do business, it's also, if you are part of a much bigger value chain, the materiality assessment, which I'll touch on in a sec, which focuses on impacts, risks, and opportunities, you will need to provide some sort of information, some sort of reporting to those companies up and down the value chain. Additional to some reporting that's required as part of the normal business relationship. What is clear, and I'm hoping we'll get to a point of at least some harmonization on this because it's absolute chaos. What is clear is that many large businesses are now requiring quite extensive ESG sustainability linked reports from their supply chain. My concern is that will by default exclude micro and a lot of SME companies because you just don't have the resource. And it's about the harmonization piece is how do we make this sensible and pragmatic, and move away from a kind of what can potentially become just a tick box exercise. It's worth noting in terms of CSRD, EFRAG has also developed a voluntary sustainability reporting standard for non-listed SMEs. So the requirements are sort of slightly reduced, but there are a variety of ways that SMEs, particularly some larger SMEs, might want to consider this. And I suspect it will be increasingly important in things like company valuation, mergers and acquisitions, those types of areas. So what's the opportunity in all of this? And I talk about not just in terms of CSRD, but having those discussions around ESG and sustainability more broadly. There's something certainly around the mitigation of current and future risks. So you can only kind of mitigate and ameliorate what you can understand. It's important to flag it's not possible to get rid of all risks. That's not what it's about. It's about having plans in place to address issues as they arise, but to also kind of mitigate those risks from happening in the first place as far as is practicable. Access to market. So a couple of months ago, I said at side event for a big conference in Brussels, speaking to a woman who works on sustainability and mining in South Africa. She's like, in terms of all of this, I just know, the only thing I want to know is what do I need to provide to be able to access markets or enable my clients to access markets? So that's a really critical point. This will really set the standard. Brand reputation and changing expectations and requirements. I think we're seeing that right across markets. Workforce, incredibly important. So think about your own workforce in terms of sort of attraction and retention. And sometimes I think that sort of retention point kind of gets ignored a little bit. So, you know, this stuff will fundamentally hit the bottom line, profit margins, all of these sorts of things. So replacing a member of staff can cost anywhere from 33% to 200% of an annual salary. Investment, really critical point. So this is about access to potentially sustainability-linked loans, green finance, potential cost savings and efficiencies. So you could think about it in terms of if you're an asset manager with multiple buildings, say, if you can ensure the efficiency of those assets in terms of energy use, for instance, that is certainly going to both improve your efficiencies, provide cost savings, as well as give you the opportunity to potentially add that sort of green premium. And it's also about meeting current and financial regulatory requirements. It's hard, so it's quite fascinating, and I do this because I have the ESG and real estate group on LinkedIn, so I keep a close eye on everything that's happening, obviously. So I get 8 to 10 Google alerts a day. What's fascinating is just how quickly this is moving. So within the built environment, for instance, it was a Guardian article, I think 3 years ago, that first mentioned embodied carbon. Obviously, there had been lots of very technical specialist discussions on embodied carbon right across sort of built environment, concrete, all those sorts of areas. What was fascinating is within just that short time frame, you know, everyone kind of now has a sense of what embodied carbon is. And it's like we're now having to talk about not just emissions, but actually what's the embodied carbon of your buildings, of concrete, of producing roads and so on. So in terms of where attention is getting paid, this is a very, very fast moving area. So developing a plan, I'll run through this quite quickly. So there's an opportunity for some questions, and do feel free to ask questions. Okay, to be honest, some of this, it's not you do one and then the next. It's a kind of virtuous circle. First of all, it's about understanding requirements. So what's required for your particular business, and then what are the specifics as they relate to CSRD and the ESRS. Next big chunk, and this is a substantive piece of work, is really developing the double materiality assessment. What we mean by double materiality, and EFRAG has produced some really good guidance on this. So it's about assessing your impact on society and the environment, and which ESG factors, so for instance, climate change, will pose a financial risk or opportunity for you, or transition, for instance. Stakeholder engagement, this has to run throughout the entirety of the process. Absolutely critical. What's interesting with the resources now from EFRAG is they have, in terms of the guidance on how to do a double materiality assessment, we've moved to a much more sophisticated understanding of what stakeholder engagement needs to look like. So I'm sure many of you will have been sent sort of surveys from, I don't know, airports, companies you've once bought something off, asking for how you rate the importance of particular factors such as climate change and in terms of business. So these sort of surveys that are sent to everyone. Please don't. So what we've seen is kind of a shift, and actually the guidance has moved to let's actually have a well-informed discussion. about these things. So draw on the experts, draw on your workforce, draw on wider stakeholders who will have an understanding of the priorities of the risks and issues. Gap analysis, so that's really about what's the state of your performance in terms of sustainability. Where are the gaps? Where do you need to fill in the gaps? The obviously critical point around data, evidence, and then monitoring, reviewing, and reporting. So it's about identifying what's needed, collecting, validating where possible. Also, that really brings up the being open, transparent, demonstrating the good, the bad, the ugly. There may be areas, for instance, where, so that social value piece, for instance, it can be really difficult to really give a real view of what's happening in that landscape. So explain the caveats, explain where there might be gaps. Embed across business and value chain. The ESG sustainability, CSRD reporting is not something that sits over there. It has to sit throughout the entirety of the organization. There will be obviously a couple of named individuals, but it needs to be, discussions certainly from board C-suite level to, across the workforce, because we're all responsible for this. So I've provided some hopefully useful resources. So SME Climate Hub, lots of free resources there. If you want to see what some other companies are doing, it's worth having a look at the We Mean Business Coalition. So that's the early adopters CSRD reporting. It's also, a lot of you will be aware that in addition to the specifics of the EU reporting, which is sort of very much a regulatory approach, a number of companies also report to using various global frameworks. So things like the Global Reporting Initiative, GRESB, which is the main one for real assets, SASB, a number of others. We've now got the development of the International Sustainability Standards Board sort of set of standards, which kind of sucks up some of the other kind of global approaches. It will certainly underpin the UK's approach. I suspect it will underpin a number of other countries' approaches. There is now guidance on how these things sit together. So it's not like you need to report to ISSB over there. You then need to do something completely and utterly separate for CSRD. There will be significant read across. I also think sometimes it's just really useful to go back to basics. So things like the Q&A on the adoption of the European Sustainability Reporting Standards. I'm sending you back to the kind of, basic source material. And EFRAG, do have a look at these documents. So it's the materiality assessment. What does that look like? What do you need to do? All of those sorts of things. Value chain. So that's looking at the entirety of your value chain up and downstream. And then there's a very painfully long spreadsheet included in the detailed ESRS data points with very, very detailed explanatory notes. So again, coming back to that question I asked at the beginning, to what extent is sustainability, ESG, built into every aspect of your business? Slightly provocative question. And what are your key challenges and opportunities? And I shall stop sharing. Great.
And now I'm off mute. Thank you so much. This is just the tip of the iceberg. Yep. I know that the more I look into it, the more I try to inform myself, it just leads to more questions. And I know you've the resources that we can share with everybody after today's session. Some of it is going back to basics, but no harm. It's a good place to start. And just once you start, I think it very easily will, as you said, it has to be everywhere within your organization. It's not just on one person's desk and it's there. You're it. Good luck. It really does involve everybody. So I think having that more holistic approach to what's required will be vital. Certainly in terms of, and where my head was at the beginning of all of this and the lead up to, both of us speaking initially. From Submit's point of view, where I see our place in helping our clients is around the data recording and the reporting. But there's so much that you kind of have to figure out before you even get to that stage. And that's what I really want to focus on now for myself and for Submit, so that we can understand how we can help our clients when they're at the data collection stage and the reporting stage. And then what happens afterwards, you know? So we're just a step, I suppose, in the process that I think that we could be a key step, certainly, and benefit the organizations and clients. But it's more important, let's get this right and understand it correctly. And then everybody's in the best place to kind of move forward. I'm going to open it up to see if anybody has any questions. There's been some comments that we've been talking through, so I'll open this up so I can see it a bit better. So forgive me. Hang on now, not that. Oh, I've one new message here. Do you know, so this is from Stephen Barrett, do you know about the XHTML aspect of reporting requirements for CSRD?
That's a level of detail I don't tend to engage with.
Okay, so we need to put a question
mark on that. Could actually be the actual sort of mechanics of reporting.
Okay, yeah, because yeah, the XHTML. So I'm going to do some homework on that, Stephen, and come back to you, I think. What else do we have here now? We have, Jacob, I know, is in the US. Here is a great article written. So there's an article here written by Connection Raj Daniels, Avoiding ESG Debt for Your Startup. So that could be an interesting resource. I'll make sure to share as well in there. So any other, another question, hang on now. Okay, sorry, Stephen. So I'll do it's more for me than for Sophie, that's fair enough. Yeah, no, absolutely. I'll speak to the guys in relation to that and get you more information. And again, I'll share that with everybody in the group. So yeah, anything else?
And in terms of Jacob's comment, yes, absolutely an opportunity for nonprofits and social impact entrepreneurs. I think, though, it is important. So it's worth flagging. I've recently done the ESG impact framework for Habitat for Humanity. So they're a global NGO with focus on housing. Also very big presence in Europe, which many of us aren't particularly aware of. So yes, absolutely big opportunities, because that sort of shift from philanthropy, CSR type approach has also meant opportunities in terms of the big corporates are now thinking about how and where they direct funds to really maximize positive impact. So that could be positive impact where, you know, benefits accrue back to the company quite directly, or actually more broadly positive impacts.
Okay, so Victor here has a question. How far should you go up and down your value chain when it comes to the stakeholder assessment as part of the double materiality assessment?
That will be in the guidance. I have to admit, I haven't read every sentence of the guidance, but that will give you a good sense. And it will also be the kind of, you know, it will vary by kind of risk, size, so size of the business, size of their contribution to what you do, lots and lots of variables. And then it's as far as practicable, but there will be additional guidance in the materiality assessment guidance from EFRAG.
Okay, so EFRAG seems to be the place to go.
What am I most excited about? Great question, Jacob. I'm excited about, it might sound a bit odd, but I want to see the good, the bad, the ugly. I want to know when things aren't going well, because it's, so you can imagine, I read quite a few ESG sustainability, sometimes integrated reports. It's like, I'm sick of reading about rainbows and unicorns. It's like, surely the world is not that wonderful for you. Surely there are a couple of challenges. You've had to have sometimes very difficult conversations with elements of your supply chain. I want to dig into the weeds a bit and get a more honest view of where we are.
Yeah, I think that's fair. I know a lot of my work with Submit has been around grant management, right?
Yep.
And I know speaking to some nonprofits, they're now, if you imagine that kind of large organization, a funder with a supply chain
Yep.
or a vendor, but they're funding a nonprofit. The nonprofit now, whereas before they didn't have anything like this to deal with, will have to start reporting back to their trusts
Yeah.
or foundations because the financial requirements are there underneath the new guidelines. So that's another thing that I think that space, the charities and nonprofit space, aren't, they're not on it yet. I don't think they realize it yet.
It's
That's nothing to do
really
with us, but
challenging.
it is.
Yeah, and
It
it's
is going to
really
be.
challenging. I think there are some basics. So for very large nonprofits, A, there should be additional resource. B, because of how they run their operations, chances are actually they could have quite extensive supply chains and they need to be run like a business. So actually some of that reporting more than fair and reasonable, but I think it's as appropriate. So to expect, say, the same due diligence process for a two-person, one-person micro company, social enterprise, nonprofit, to expect from them what you're expecting from a company with 1,000 people. It's about actually what is the stuff you need to know. Obviously, across the built environment, there, I've filled in these due diligence, thankfully, because I don't go on sites. I don't need a hard hat. I don't do, I'm not an expert on health and safety or how to build a bridge. So, there's this much due diligence I need to do, which is fit for purpose and appropriate. So it's things like, what's my unique tax reference? Absolutely critical. Yes, great. But I don't need to be able to comply with this specific ISO around project management or health and safety or, whistleblowing hotlines, or all of these sorts of things, because it's not appropriate and fit for purpose. But you've got some fairly small companies actually, or being asked, can you demonstrate you're aligning with Science-Based Targets Initiative?
Yeah.
It's like, what?
Yeah, because I had a very small nonprofit and two people on the team running the whole thing and taking care of everything. And one of their big funders came back and they asking them about their environmental policy and, just loads. And it was stuff they just didn't know how to get started, how to answer, we've got some more questions, I think, in there as well. Thanks for the webinar from Barbara. Is there any ugly or /don't that you'd like to share that you can share? Any, without dropping any names, but any examples of, oh, that's juicy and shouldn't be happening? Spill the tea, I
Well,
think, is what Barbara's asking, maybe.
when I do a sort of broader presentation around ESG, there are a couple of those where it's, particularly when it comes to greenwashing, particularly when it comes to some of the recent scandals. So, for instance, Brewdog, We're So Punk and everything else, don't even touch on the kind of governance issues and everything else. And this has all been reported in the media. So, recent fines and new requirements on the likes of Boohoo. So essentially kind of, paying people in factories £3 an hour in Leicester. So the UK has a minimum wage. It's more than £3. Someone, a subcontractor, cleaner, someone who'd been subcontracted to clean for some of the Sainsbury's, so big supermarket, went to jail because his workers, he'd basically taken their passports, had charged them fees. I might not be right on all the details, had them working like 16, 18-hour days. But they're some of the more, there are quite a few where it's like, it's not that hard to get this right. And I think one of the critical points is, how is this being engaged with at that very senior, at the board level, at the C-suite? Who is asking those sometimes really simple but incredibly difficult, challenging questions? Like the evidence. What's the evidence for what you're telling me?
You see, it's going above, it's not a tick the box scenario at all. You have to prove it, you have to back it up. And that's what's different, I think, as opposed to what we've had to deal with before. We've got Stephen asking, Sophie, is this going to lead to a lot of legal work?
Yep. Well, both a lot of legal as well as a lot of auditing. What we're starting to see is an increase. So a lot of you would have come across some of the shareholder sort of litigation. What we are starting to see is an increasing amount of litigation, certainly in the context of mergers and acquisitions. So you need to be kind of upfront about where you are. I think legal, there's also that important role around sort of compliance, that basically avoiding the greenwashing. Are you actually kind of doing what you say you're doing?
Yeah.
Those sorts of things.
Yeah.
And yes, in terms of question from Stephen, environmental groups, I think it will, because I think to a large extent, companies have gotten away with kind of, I shouldn't say gotten away with, because there are some good companies out there, but it's very easy to tell the good stories. It's more problematic to tell the more difficult stories. So I think what we are going to see is a demand, and it leads back to the second point of Stephen's question. We're going to see a greater demand for that transparency, accountability, and a clear explain yourself. I think it will also be, there are questions of, for instance, for board members, potentially, will they be legally liable? Particularly where it's a clear, someone's been lying here. Yeah. So this is about people being held and companies being held to account for their actions, and for kind of also about how they're considered and how they're valued in the market.
It's ultimately going to give just a level playing field. It's like, show me your cards. Everybody, cards on the table, guys. And now, okay, let's fix this, because it's not that they're looking for perfection. No, we're looking for something we can action, and let's fix this, as opposed to expecting everybody to be perfect. Because I think everybody hands up, well, they can't say that. And I don't think they shouldn't be saying that. They'll be found out pretty quickly. So Jacob's put a link in there, peopleandplanetfirst.org. So that, again, all the information you guys are sharing in the chat, I'll happily add on to the resources that we'll be sending back to everyone here. I think, okay, it's a group that's working on standardization for social enterprises. Yeah.
Brilliant.
Yeah, more of it, says you. Okay, so if I draw it to a close,
yep,
I think, again, feel free to contact both Sophie or myself if you have any other questions afterwards. We're all connected on LinkedIn.
Yep.
We have our emails as well. I will reach out to everybody who has attended and everyone who's registered to attend, with everything, copy of everything. And I think this is the first of possibly a few sessions we may do, based on some of the questions, the line of questioning, but also other areas. I think it'd be interesting to do a series of these kind of just check-ins, even updates, what's the latest, and it'd be really interesting to find out more about your journeys along the whole reporting aspect of ESG and CSRD. And with that, thank you very much, everybody. Thanks for your attention. And Dr. Sophie, thank you so much for joining us and for your insights.
And do feel free to reach out, folks.
Yeah, absolutely. Yeah, so you'll have all our deets. Thank you again. I'm trying to be cool. Talk to you soon.
Great.
Thank you so much, everybody. Bye-bye. Bye-bye.
Bye.
Oh, almost.